Face value. Principal amount of a bond that represents the amount of indebtedness, also referred to as principal, par value, or maturity value. Maturity. Specified date on which the principal of a bond is paid. Bills. Maturity of less than a year. Notes. Maturity between 1 and 10 years. Bonds. Maturity over 10 years but less than 30 years. Coupon. Stated interest payment made on a bond. Coupon rate. Annual coupon, face value of a bond. Straight coupon. Bond that has a fixed coupon over the bond's maturity. Bond where the coupon rate is adjustable. Security. A debt may be unsecured or secured with the pledge of specific property. An unsecured debt is referred to as a debenture. Seniority. Indication of preference in the claim on assets and income. Debts are sometimes labeled as senior, junior, or subordinate. Call provision. Agreement giving the issuer the option to repurchase the bond at a specified price prior to maturity. Put provision. Agreement giving the holder of the bond the right to redeem the bond on a specific coupon date, before the bond matures. Bid price. Price a dealer is willing to pay for a security. Ask price. Price a dealer is willing to accept for selling the security. Bid-ask price. The difference between the bid price and the ask price. Price of a bond. Present value of coupons. Present value of face value. Relationship between bond prices and market interest rates. At a higher interest rate, the PV of payments received by bondholders is lower. Bond price falls as the interest rate rises. At a lower interest rate, the PV of payments received by bondholders is higher. Bond prices rise as the interest rate rises. Yield to maturity. The annual interest rate that makes the PV of a bond's payments equal to its price when the bond is held to maturity. The YTM is expressed as an APR. Current yield. A bond's annual coupon payment divided by its closing price. Implicit interest. Price * year. Holding period yield. Your realized return when you sell a bond before it matures. Inflation. A rise in general level of prices of goods and services in an economy over a period of time. Nominal interest rate. Interest rate of return that has not been adjusted for inflation. Real interest rate. Nominal interest rate, inflation rate. Relationship btwn interest rate and maturity. Interest rate increases with maturity. Inflation premium. The portion of the nominal interest rate that represents compensation for expected future inflation. Interest rate risk premium. The compensation investors demand for bearing interest rate risk. Interest rate risk. The risk that yields will change, changing the value of the debt. Interest rate risk is the sensitivity of a debt's price to changes in interest rates. Price sensitivity is dependent on time to maturity, coupon rate. The longer the time to maturity, the greater the interest rate risk. The lower the coupon rate, the greater the interest rate risk. Default risk. The risk that the debtor will default. Default risk premium. The portion of the nominal interest rate that represents compensation for the possibility of default. Liquidity premium. The portion of the nominal interest rate that represents compensation for lack of liquidity.